no spinning around with every trade that's at them, making big commission and trading from. Opening playbook, we're ready to roll. Daily moves, fire up your soul. Strategy like a razor. This is where the razor made. This is where.
Hey guys, sorry about that. I had the audio looping a little bit there. We still playing around with different setups and such. So, you know, still having little things to work out, but sorry about that kind of echo going on there. All right, it is 10 a.m. on Tuesday, August 12th. Welcome to Opening Playbook, and here is Nathan Tucci.
Well, hello. How are you, Dave?
Well, I'm doing all right. How are you?
Doing well. Can't complain. Excited to see everyone on a beautiful Tuesday. Looks like everyone was able to make it into the room today. We did have some things. This domain that we have, which is just temporary for right now, we're gonna be getting updated. It seems like it does flag some people's security systems and things like that. I don't know if it's because it's a new domain that got a whole bunch of traffic, or it's because it's an old domain that we didn't use for a while and had some baggage on it, or something in between. But we are working on that. For most folks, you should be able to just kind of use that allow anyway, or add as safe site, or something similar in your settings to get through. But glad that you guys are here. And yes, Silvana, another winner in overnight options. We are continuing to roll right along there, which is awesome. So excited about that. Also have a lot to cover today. Tuesdays are probably our deepest analysis day because Graham gives you the whole spiel. He doesn't really hold anything back. He gives you his entire outlook, his seasonality outlook, his top stocks, everything, and then even normally some live trades. So as always, this will be an in-depth session that we're looking forward to. And then I've got a couple things here at the end that I'm excited to share as well. I'm going to be talking about it. You guys might have seen, I gave Blake some notes yesterday, 5 stocks from 5 different sectors that I went through. So I know that some people missed that. I'll be covering that. Also get to talk about the income machine, which I really have not talked about in way too long. And I know, as crazy as it is, there's still some people in this room who have not been using the income machine. So I'm always excited to get to talk about the income machine.
There's no way there's nobody using the income machine.
Every time I ask in the chat, I get 100 people saying I'm not using it yet. So
there's a free trial to prove how good it is.
I know. We will talk about that shortly as well. Also, one of the things that I've been kind of thinking about and getting more analysis around is just the simple question of kind of where we go from here. Is this a melt up that still has a year left of potential, or are we really getting toward one of those, historically overvalued, overhyped times where a real correction is going to take place? I'll show you 2 charts. Again, I shared these with Blake, so you might have seen them already, but I'll share them again. 2 very different views on where we could go from here. So I'll share that too. But first, we're going to jump into all of the regular Tuesday game plan with Graham.
Hey, Graham.
Hey, how's it going, everyone? Sorry I was a minute late there trying to get the 60-minute income trade all squared away for us. No, I actually have a chart to add to my slide deck as well for today.
How dare you spend your time trading?
I know. Alrighty. And Nate, it kind of maybe goes into what you were just saying. I don't know. I haven't seen your slides yet, but we'll see. All right, let me go ahead and share my screen here. Put us in the vortex. All right, add this to stage. Did it work? Oh no. It says before presenting, remove other media.
Oh, that means we got to get rid of this
There we go. Now we're in the vortex.
other stuff. There you go.
All righty. Let's go ahead and get this party started today. Obviously doing the Tuesday trading market outlook. Volatility still, VIX is technically down today, but we're seeing those candles get bigger and bigger each day into August, as we kind of expected. For starters, the Telegram of the week, just highlighting a fun one we had. I threw this in Telegram, a bunch of Twilio bearish orders on earnings. This one ended up popping way lower on the earnings move. So that was about a 20% move on the stock overnight. If you made some money on that, good for you. Happy for you. Obviously, the earnings ones are a bit fun. We've been doing them in the closing playbooks, but they can feel like a bit of a gamble because, let's be honest, the earnings events kind of are. They're not our normal tune where we normally address the market in very specific, methodical ways. These are a little bit more fun where we look for speculative plays and hopefully get a big hit. Now, I will say my 2 earnings trades I took yesterday did not turn out so good. But hey, this one was pretty fantastic right there on Twilio. For the open trades, and I should probably update this, but I think they're about the same. Yep, pretty much the same numbers today with 4 up, 3 down, net ahead here with our free opening playbook trades. The QQQ is the one that's dragging down the portfolio the most, but keep in mind, guys, that was a hedge for us. So that was a position I put on where I said, hey, I'm okay with burning this as an insurance play, buying $1,000 of insurance. I don't want to sell all of my good stocks. I don't want to take capital gains on those right now. So I'd rather just take a quick $1,000 hedge to the downside where if things do go south, at least I can protect some of my profits. So I'm okay with that one. The rest are looking pretty good across the board. For our morning market update, here's where we opened this morning, and we are just slightly lower on the S&P from here. However, I do want to point out the IWM, when I took this screenshot at the open, was up 0.5%. That's the small caps. The small caps are now up 1.3%. So they're looking very bullish, obviously coming off that CPI reading this morning that was a little bit better than expected, which in theory means that the Fed can, if they want to, we don't know if they want to or not, but they can potentially start cutting interest rates in a healthy environment, which is obviously good for the smaller companies who take on a lot of debt. If they can borrow for cheaper, their profit margins increase. So small caps are now at 1.3% on the day. For economic news this week, obviously the big one was this morning with this CPI. That's kind of our key inflation report. You can see here the first 2 month over month came in line with expectations, forecast, actual, previous. The year over year came in a little bit lower than expected. So just under the CPI expectations, which is good for the markets. That's good for the Fed being able to use their tools if needed. I still believe that we're in an environment where if rate cuts happened right away, that we'd probably see inflation return. But at least this is trending in the right direction. Later this week, Thursday, PPI in the morning at 8:30, similar to CPI, a little less of an effect, but an important report, and then retail sales on Friday. For next week, a bit of a quieter week, and this is all that's posted so far. I'm sure they'll add a few more things, but nothing until Thursday with the jobless claims and some manufacturing reports, which we've seen the manufacturing reports move the markets in either direction. So those are definitely something to keep an eye out on. For our charts of the week, and these are pretty much all bearish, and I didn't intend that. It just happened to be that I saw a whole bunch of bearish charts this week, so I'm sharing them with you guys right here, right now. This was an interesting one from Bloomberg, which charts personal spending as a percentage. And you can see here, normally about that 2% level here for personal spending. Anytime it's gone down like it is right now, tended to be right around a market crash. Here's 2008. Here's COVID. Here's our bear market of 2022. So again, this is where we are right now. I'm not saying this means that we're going to crash tomorrow or anything like that, but that definitely shows, in my opinion, that the economy is actually slowing. I know that the Fed and myself too have been very clear that they see the economy being strong. The numbers have held up. Things have looked good. However, when this starts to drop like it is right now, the rest of the economy tends to start to slow down. So this is definitely kind of a little yellow caution flag for us as far as a longer term outlook in the market. Here's a fun chart I found, and this isn't necessarily a bearish one. And if anyone knows the tickers in this list, that would be very awesome for you to share. Bank of America launched a AI risk basket, basically made a basket of all the stocks most at risk with the newest AI developments. I saw like Adobe was in there, Wix, the website creators, anything to do with coding, pictures, photography, shooting videos. Obviously, we've seen AI been able to do pretty much all of that. Not perfectly yet, but it's getting a lot better and better. So we're seeing a divergence here where the S&P is going higher and these stocks that they have listed are going lower as expected. Now, this is protected. They don't share the list of stocks with them. I think you have to have a Bloomberg terminal to access them. But if anyone here does, I'd be happy and all ears and eyes open to see if you know any of the stocks in them. The most, I think I found Adobe, Wix, and there was Pinterest maybe. There's one other that was at risk of AI, which could be good short opportunities if you think about the longer term, like profit pairs type of trades that Nate does, or link trades, where one stock is gaining market capitalization, the other one is losing market share. We're seeing that play out exactly here. I found this chart this week too, which we've been looking at the post-election seasonal average for the S&P. This was just a different way to look at it, a different visual for us. So this yellow line here is the S&P year to date, and you can see the scale starts over here. So 0% is where this one starts. This blue line is the average post-election year, and this scale is over here. So this starts at 0% over here. It's just so you can get an idea overlaid where we're at. This is where we are at right now. And I thought this was a very good, clear visual for us of where we stand compared to the average market cycle here. It's never going to be apples to apples, right? But you can see here that these have aligned pretty well over the year. S&P starts the year strong, very normal. That happened this year. Late Q1 going into Q2, we see some volatility, some market drops historically. What did we see this year? It happened to be off the back of tariff news, but we saw that drop. And then from April through August, this blue line says that's historically very, very bullish for stocks. What did we see this year? Very, very bullish for stocks. Now here we are right nearing the middle of August, and that's typically where we see a cool off. Again, this doesn't necessarily mean that this is going to happen. This is not a crystal ball, but it's good to learn history so that we don't repeat it, or so that we are aware if we, excuse me, I shouldn't say so we don't repeat it. So we don't repeat the mistakes, and we are aware of what's happened in the past so that we can use it as a guide for us. And another bearish one. Again, I did not intend for this all to be bearish for you guys today. It just kind of happened. That's how the chips laid out for me. This one I just saw this morning, which looked at the combined trailing price to earnings, forward PE, and a bunch of other metrics, including market cap to GDP. And it circled where we are at right now in the market and other times in the past where we've been this high. So if we look at where we are right now, very high. The time before it was that high, well, if you look here, it's like COVID, right before COVID, which again, that was a bit of an anomaly. But either way, we did get that flush out. The time before that, 1999. Does anyone know what happened in year 2000, 2001, 2002, 2003? We had the dot-com bubble, multi-year flush out. 1966, this was right going into the stagflation period of the 1970s. Markets lost 10 years of returns during that time. And when I say lost, I should just mean like they gained nothing over 10 years. There were some downs, there were some ups, there were some downs, there were some ups, but ultimately flat for growth. And 1929, I think we all know what this one is. That was just before the Great Depression. Now, keep in mind, the market today, the economy today is much, much different than it was 100 years ago. There wasn't the internet back then. I mean, people were just starting to use cars. There's no cell phones, nothing like that. There's no NVIDIA AI chips. So it's very, very different. Again, it's not apples to apples, But it is interesting to note that anytime valuations get this lofty, get this high, we typically do see a correction of some form. And the ones that happen to be circled were pretty ugly corrections. So if we keep on moving through, taking a look at the volatility seasonality, I've shown you guys this a few times. We expect volatility to continue to increase over the next 60, 90 days. You can see the seasonal VIX returns since 1990. So this is 35 years of data right here to show us that typically we're getting to that point where things get a little bit rocky. Gold seasonality. Same thing. When money flees the risk on assets, they tend to go to safe assets. Now, gold's down today. It posted highs last Thursday on the gold futures and back a little bit from there. But if we do see a small shakeout in the markets, I would expect gold to go higher as a safe haven asset. And again, I will show you this one more time. This is our Bitcoin seasonality, which we don't have 35 years worth of data on Bitcoin. It's only been around. It goes back to 2013 here. But you can see August and September, if we look down here at the medians, negative months. The average negative for September, mostly flat for August. So again, this just tells us that typically it's a risk-off time for the markets, which generally means the more speculative assets go down. Now, we are in a little bit of a debate right now of is Bitcoin a speculative risk asset still, or are people starting to see it as a hedge against inflation, kind of like gold? So we'll see how it plays out this year, but it's good to keep all of that in mind. For earnings this week, we've got another big, busy week of earnings. Today, after the close, we've got CoreWeave and Rigetti Computing, both two very speculative AI names that have seen some crazy rallies this year on and off, but like massive days where the stock's going 20% in a day. So we'll see what happens there. Another one that I love their food, Kava. We traded it from 42. I sold it at 100, went to 170, and now it's pulled back since then. But Kava reports earnings today. I expect weak earnings similar to what we've seen with Chipotle. I think, we talk about let me flash back here, consumer spending dropping. Well, one of the, obviously the Lululemons of the world are going to be affected by that. Probably some car companies, but also restaurant expenditures, especially we're not talking about McDonald's here. We're talking about Kava, which is a little bit more per meal. Delicious food. I love it, but expect to see shrinking growth for companies like Kava, Chipotle, and the others in that bucket if we do see personal spending continuing to decrease. So let me flip back forward to where I was. All right. And then later in the week, we got some more earnings to look at. Again, we'll cover these in the closing playbook each day at 3:30 p.m. Eastern. So make sure you're there. We've had some great wins. Yesterday was not so good for me, but that happens if you're going to play earnings. You got to know that it's pretty binary, hit or miss. Either way, whether you trade them or not, they are good to keep an eye on to gauge overall market health. We can get a really good idea of how the discretionary sector may be doing based on Kava's earnings and their guidance. So just something to keep in mind. So again, closing playbook, 3:30 p.m. Eastern today, tomorrow, the next day, and every day this week and going forward. Hope to see you there if you can make it. For our overall market overview, last class, this is what I told you. Actually, this is the second time I've said this. I'm going to say it again this week. That's a little spoiler for you. I said we're going to see more volatility. We may see new highs this month in the stock market, but I also think that at some point we are going to see a 5% drop in the market. And today we didn't quite get to new all-time highs. We got close, not quite there, but we are seeing this action right now. I'll show you what came next. So we had that big drop and then a rally back from there. And this is kind of where we're at today, right here where my mouse is. Again, I don't think that all-time highs are out of the equation, but I also really believe we're going to see a flush out at some point this month. And that's why I put on that QQQ insurance play, if you will, just in case we do get a flush, just to protect some of my stock portfolio profits. So the question now is, where do we go from here? If we look at the fear and greed index, based on market internals, we are about the same place we were last week. You can see last week's reading right here, 56. 1 month ago, we were in extreme greed. We were there for a while in extreme greed, and then we got a little pullback, actually a pretty quick pullback when the markets, made that transition end of July going into August on that small pullback, flip right here towards the bottom end of the greed section. This just basically means, if think of it like this, how overheated or cooled off is the market sentiment right now. We're kind of in a healthy level. If you just look at this at face value, it's a healthy level for the stock market. However, if we're looking at this CPC, which is the put to call ratio, again, generally we're just looking for outliers here. We're looking for when the options market gets extremely bullish, might be a good time to sell, right? We saw this nearing the end of July when I told you I think we're going to get a cool off here, right there. And on the flip side, when it gets above 1, that can be oversold or a time to get bullish. And this is right here, the bottom of that April dump when the market's dumped 20% in a couple of weeks. You can see here right at the bottom, it went sky high. That's a good signal to buy. So where are we right now? We are smack dab in the middle with no clear indication of direction or which way we may head next based on the put to call ratio. So seasonally speaking, I didn't miss a slide. All right. This is a new chart I found, shared with you guys. It'll probably replace my other seasonal chart that I've been showing you, which is just showing the full month average. This breaks it down to a couple more buckets for us. That dark blue line tells us since 1950, so 75 years of data. The light blue line shows us the last 20 years, orange line past 10 years. And then that gray line is this year specifically for post-election years, right? First year of a new term in office. So you can see, again, seasonally, not a good time for August, not a good time for September. This is that chart we've been looking at with the presidential pattern each and every week this year, similar to that one I showed you earlier with the blue and orange line. Again, typically a bearish time for the markets. Yeah, there it is right there. So again, this is, I think, just a better view of it to show where we are now and why I may be getting a little hesitant to load up on bullish positions right now. So my upcoming prediction for you guys, and I told you it was a spoiler because I told you at the start, the same thing, sticking to my tune for August. There's going to be more volatility. I do not think we're going to see market action like this that looks like nothing, just chugging higher slowly and steady. I think we're going to see market action more like this kind of stuff back here. And I should have zoomed this out more to show you a better view of this if you guys have your S&P up, is to look at the S&P back at the middle of December going into January. Go take a look at that. That's more of what I expect over the month of August. Oh, there it is right there. Nate, I got to get that portion of the screen here so I can see what slide's coming next. Flying blind right now. It reminds me of this. So this is exactly what I was talking about, this kind of action. Where we're just seeing, look, it made new all-time highs here, but there's extreme whipsawing along the way. So that's what I'm expecting coming up. Again, we may make all-time highs. We might make all-time highs today, but I do expect there to be a 5% flash drop here in the stock market. Seasonally speaking, the sectors we like the most are infotech, utilities, and then technically real estate, but I highlighted in yellow because right now real estate has been weak, although it's probably up nicely today with the CPI coming in, because that should be good for a lot of real estate stocks. I know Rocket Mortgage, who I've been waiting on. I've been waiting on Rocket to make a little bit of a deeper pullback. It's up 6% now today. So may not get that pullback that I've been looking for. But that said, I've been avoiding real estate for the most part just because of the high interest rate environment, and more so would want to focus on these two, tech and utilities, this month. For our sector strength and breakdown, last class I told you it's not a good time to be going heavy all in on any bullish swing trades, in my opinion. The one I liked the most was technology, specifically semiconductor stocks, the NVIDIAs, AMD, AVGOs of the world. And then if you wanted something to go short, look at materials, because materials is typically one of our weakest sectors, and it's also currently lagging in the markets. Energy would be another one there. So for the notable shift week, what happened, what changed? Well, XLU, you can see here, we just said that XLK and XLU, that's technology and utilities, are seasonally the two best sectors to be invested in August. That's just based on data. What do you know right now? Those are the two strongest sectors in the market right now. So XLU is holding strong seasonally. XLK is still leading the pack and holding strong. And we had some shifting here in the middle of the curve. Actually, look at XLRE, that real estate sector, the one I told you I wanted to avoid simply because of the uncertain interest rate environment we're in. That one actually dropped. So even though it said seasonally bullish, we know where we are currently right now. It's just not a high conviction play. So for this week, going to be sticking with those same sectors, technology, utility to the upside. I like communications. I like industrial stocks right now as well. I put a yellow around there, kind of like a medium bullishness, and then still materials to the downside. And you could do energy if you want to throw that in there as well. I don't love trading to the downside. I think it's generally much harder than trading to the upside. It's because stocks tend to go up. Trading to the downside, you're sort of swimming against the tide of the market for the most part. So that's my take there. Now for the nitty gritty here, the trades we're going to take today. I've got an apex signal here on Costco for you guys, and you can see it there, plain blue. I'm not even sure where Costco's out today, but we're going to go find a trade on it. I have one open, I think from last week on Costco, and it's up. It's up 15% week over week, so not bad. But I like Costco a lot right now. I'm going to add to it here with the new trade because I know not everyone made it last week, so we'll get this knocked out now. Now, if you want to trade the stock, this is what the Apex indicator gave us for the criteria. The stop price, 804. The profit target price, 1,020. Now, let me pull up my Apex cheat sheet here so we have a good idea of how we might want to trade this. And Nate, let me know. Can we see this on the screen? Okay, we can. Oh, cool. I can pull my brokerage up then. All right. So here is our Apex stock hit list. We're going to come down here to Costco. We see that when we get that blue arrow, it has worked out 87% of the time. It's hit that profit target, meaning the other 12%, it hit the stop loss. But 87% of the time, it's gone on to hit the profit target for an average return of 2.3%. That's not huge. If you're trading the stock, we're going to trade it with options to see if we can get a much juicier result than that. And the next thing we want to know here is how long does it normally take to hit the profit target? Typically, Costco takes about 7 weeks on average. So this fired last week. We'll look for about 6 weeks out. Again, I already have a position here. on Costco, but I'm going to look to add to it here because I really like this stock right now and how strong it's been week over week. So let me go ahead and pull up my Thinkorswim. And here we go. Make sure it's, let me know if I need to make this bigger. Oh no, it's not coming up on the screen. Okay, I'm gonna have to exit this PowerPoint. All right. Can you see it now?
Yep.
I'm gonna make it bigger for you guys. Oh boy, nice and big. All right, so we like Costco. Let me flip with the Apex on. I had to hide it because otherwise it shows up on all my charts when I'm trying to take screen. Oops, that's the wrong one. I just like using the upper for Apex. Makes it easy. So again, here we have Costco with a bullish entry, profit target 1,020. We know from here it takes about 6 weeks to get there. And 6 weeks out from today, 9/22. Earnings looks like it comes after that. Let me just flip to a daily to get that exact date, just so we don't pick an expiration during that time. 9/25 earnings for Costco. So let's go to look to trade this guy. Again, 9/25 is earnings, so we're not going to trade the 26th of September. We'll look for the 19th. Okay, you can see I already have a position here. Let's see what this is currently at. I might just add to it and give it to you guys as well. Here, this is a bet right now where it's at. It's technically in the money by $1.50. So if Costco went flat from here for the next 6 weeks, I would see a full profit. Which right now, where it's at, just to let you know, about 76% return on investment. So again, I said Costco typically averages 2% during this period, which is fine for stocks. It's not a huge return by any means, but by using the right options, 73% sounds a lot better. So I'm going to go ahead and type this one up here. Actually, I might just have it from last week. Again, it's up about 15% or so right now. So if you made it last week, congrats to you. Let me go ahead and type this up for you guys. So if you want to take this, this is a safer approach to trading it versus going out of the money. If you want to go out of the money, you can use the profit target. However, given my overall market opinions, that I see some downside potentially coming here, I don't want to go too aggressive right now. So let me type this up, and I will post for you guys in the chat. Today is August 12th. And again, we're going to use the 19th of September expiration. I'm going to buy the 975 call, sell the 980 call. This is technically right there in the money. If you wanted to wrap it, I'm just not going to do it because it'll end up making a conflicting order with what I currently have. But if you wanted to wrap it, you could use the 980, 985 instead. But again, right here, it's at 293 now, so it's moving up a little bit. I'm just going to set one at 288. That's just what I ran it at. Again, Thinkorswim's nice. It does all the work for us, tells us our total risk, $280 to turn a $212 profit. So 73% return on investment here. And that's if, all right, filled right away. So you might be able to get a better fill there. That's if Costco goes anywhere above my crosshairs here over the next 6 weeks. Now, if you want to do an automated profit target, let me walk you through that here next, because we could get to a situation, like I said, we're going to see some volatility, I believe. We could see a situation where it runs up fast now, dumps later, because that's just the environment I think we're in for the stock market. So let's say we want to take profits on Costco at about halfway to the target. So I'm going to set a 40% automated target on Costco. I currently have some positions open, so I'll let some close out and some ride. But if you want to set a profit target for about half that potential gain, I just got filled at 288. So just like we do in the 60-minute income trade, I'm going to multiply it by that profit target I want. I want 40%, so I'm going to multiply my entry price by 1.4. And that tells me my limit price to sell, to close this, should be about 403. Does everyone see how I did that? I know I kind of went fast through there. Yes.
Hey guys, on when we're in the public chat, please be respectful and careful of talking about open trades from services. Obviously, we're always happy to talk about our trades, what's going on, especially after they've already closed. But if you've got, hey, I just took this entry and you're giving specific details for a service that people are paying money for, we want to be careful about that. Obviously, we want to honor and respect the people who did pay the money. So just please be careful with that kind of stuff in the chat. Again, always fine to say, hey, Nate, yesterday's trade didn't work out, or XYZ. Like, we're never going to be worried about that, but just be careful when it's, open trade discussion that should be members only.
Yeah, and I'm looking here in the chat. Looks like they're talking about 60-minute income. Hey, you guys know this. I'm very transparent with you guys. I showed you guys I had a loser yesterday. Nate, we had about 40% of the people hit yesterday. Mine did not.
I saw a ton of people in the chat who did hit.
I know, that was awesome. I got some really, really nice emails from it, but a lot of people got a much better entry price than I did, just because right when I entered, the market's turned against it. So congrats to those of you who hit. However, I see you guys talking about the Vold in the chat, and I actually want to commend you for that, because as we covered in the masterclass, if you want the more validated high conviction entries, that's exactly what you should be looking at. So Doug, Bob, all of you talking about the Vold. I take the trade every single day, Nate. I do it regardless. As long as the indicator says it's time to go, that means I'm going, because I know that the data over time has been very, very powerful. And I am not backing down from it. However, if you guys want to know your position sizing, or if you're trying to limit your trades, you guys are looking at the right thing. So keep doing what you're doing, guys. By looking at the Vold, that is definitely the right move to be making. Appreciate you guys. All right. So let's go ahead and talk about this profit target on Costco. Again, I entered for 288 here.
Hey Graham, can I step in with an urgent update?
Oh, sure.
Urgent update, guys. My Archer trade that was down 93% is now profitable, and I am closing it. What a rebound!
Oh my goodness, Nate! I closed it when it ripped at the open for a small loss. But wow,
I'm going to get about maybe 45% winner out of that dead in the water trade. Sorry, urgent update. I just looked at the chart and saw it. So let's go. Dead in the water trade's turning into winners. You can't ask for more.
Congratulations on that. Now we know why Nathan doesn't jump out of trades and lets them ride to see if they come back.
Yeah, I love it. All right, back to Costco. So we entered for 288. I'm going to set my profit target here at 40%. So I'm just going to multiply by 1.4, and that's going to give me the price to set it up. Of course, let me go ahead and open up the opening playbook members portal for you guys. Because if you're in there, you know that we've got a cool tool for you. Oops. All right. So let me scroll down. I got to make sure. Okay, screen share is working. If you go to the opening playbook members portal, scroll down here to the calculators. There's this new fancy dancy opening playbook debit spread target assistant. All done for you. You click that link and it opens up a nice calculator for you. So again, on Costco, I bought the 975 call. I sold the 980 call. I entered for 288. I just did one. And now, of course, it calculates the max return for me, just like what we saw in Thinkorswim. 288 at risk to make a $212 profit, turning it into $500. Now, depending on what you want to do with the profit target, this field is open for you to adjust. I told you I want to do a 40% target. And what do you know? Limit price 403, just like we drew it up. Just like I showed you, I can do it pretty quick on my calculator. But either way, this is there in the members portal for you. If you want to do a 50% target, done for you. If you want to be more conservative, maybe you want a 20% target. Type in whatever percentage you want, and it does the math for you. Now, of course, I told you the max here is 73% because of the spread. So if I type in 150% target, obviously there's no such thing because that's above the max value of the spread.
By the way, Graham, good news on the calculator. Yesterday, I finally figured out how I can actually make new changes to the published version. So I can actually put all your requests in now, which I took notes on 3 weeks ago. And then after we moved it to the new domain, I couldn't actually make any updates. So I have battled through, figured it out. Of course, I forget all of your edits at this point, but yeah, I can now add them back in and publish it officially for the members.
Awesome. All right. So here with Costco, we know our price is 403. I'm just going to sell this back. So you just create a closing order. So if you're in your brokerage, you just right click, say close this or exit this trade. And then before you send it off, make sure to type in that price you want. For me, I said 403 would be my 40% target. That makes me happy. And then set it as a limit order and then mark it as GTC. That means good till canceled, meaning this order will stay open until that target is hit or expiration day, whichever comes first. So let's say it hits on Friday and I'm out golfing. I don't really golf. I'm terrible. But let's say I was, and I don't have my brokerage open, this would automatically fill for me if it got to that price. So pretty cool. I'm going to go ahead and send this off. So we have a 40% target open for one of my Costco positions. Hopefully that made good sense to you guys, and we'll keep on rolling. For Newton, or not Newton, let's start with Hot Sheet. Hot Sheet pick of the week. I'll make this full screen again, then I'll jump back. VST is one that's seasonally strong from August 11th to the next 22 days. So what's that put us in? The 3rd of September, roughly speaking. VST is the ticker. And this is so hard for me to see on my when it's all blown up here. Oh, wait, I got to make a small screen. So we know it's a 22-day hold time, about a 5% average return on VST. And even better for us, let me pull this back up. It's a utility stock. We said utilities are seasonally strong. It's the second strongest sector right now. So on this one, things are really lining up nicely for us. Now I'm just going to go to a daily chart. Let me throw my other indicators back on. Just don't want to cloud our vision here, but You can see Newton is bullish today. It's been bullish for a while. Pretty nice trend. VST is moving higher. We should have had this class yesterday when I posted this in here. Seasonally, it's a strong stock. So technically, the entry date was yesterday. So if you're in the on-the-clock stocks program, you got this one yesterday. You should be up nicely today. But we'll go ahead and do it one day late here on the opening playbook for you guys to see how it all works. So again, it's a 4.9% average move on this stock. So I'm going to take the price and see where that's going to put us. Puts it about 216 for the average move by September 3rd. So let me drop my crosshairs. So right about where my crosshairs are, right near the all-time highs here. It's a utility stock. We like utilities. And it's in a great trend. Christine says it's so tiny on this plot. Does this still look tiny for you guys? I tried to make it big.
No, it's I was just actually responding. You can make it bigger than Zoom. You might have to scroll over and do the full screen, but you can.
Make it full screen for them.
The platform actually gives you the ability to make it even larger than Zoom, so that's one of the benefits. You obviously, if you're showing a zoomed out chart, then yeah, it's going to be zoomed out. But if you're zoomed in, it'll be pretty good.
So yeah, I think on the page in the bottom right-hand corner, a full screen. Is that what you're suggesting?
Yep.
Okay. So on that page, guys, if you want to make it bigger, there's a little full screen button. You might lose Nate and my faces, but at least you get to see the trade. All right. So 216 is the ideal range for this one by September 3rd. So let me make sure I don't go overwrite my current options here. So took the September 5th. This was in the on-the-clock stocks program. Obviously, it's up nicely. But let's go ahead and do a wrap order today for it. Take a look at the prices here. So with the wrap order, we're going to buy one strike lower, sell one strike higher. In this case, that's the 210 strike that we're selling higher, which in my opinion is good for us because we expect, historically speaking, this should get to about 216 on average. Again, we can't predict the future, but we can use past data to try and get a good gauge of where it may go. So that 210 is still going to give us a good bit of range where it only has to move about 2% from here to get to that target versus the full 5%. And by wrapping it, the price is moving crazy, but I'm going to set it at that 250 price that it was just at. I might have to let it sit. Again, guys, make sure you use a limit order. Use a limit order. But let me type this up for you guys here, and I'll post it in the chat. Hot sheet. Entry ticker is VST. We're doing the 5th of September expiration. And I'm buying the 205 call. And I'm selling the 210 call. Use a net debit of 250 in limit order. I'm going to post this in the chat now. Make sure it's all good. All right. Awesome. Again, visually, we expect the stock, historically speaking, to get right up to here. With the wrap order, we only need it above this line here. So a much bigger difference here, especially if I zoom in. So instead of needing it to go all the way up to here, which is really not that crazy of a move, we give ourselves a little bit more wiggle room where it just has to keep drifting higher in the direction it's already headed. So I'm going to set that at 250. That's the mid price right now anyways. And this is going to give us a potential to double our investment. And I'm not sure where I put that calculator, but just to show you guys, if you want to type it in, here it is. If you want to type it in here, again, we're buying the 205, selling the 210, entry price 250. It does all the math for us. We're risking 250 to double it. And if you want to set a profit target, 50% profit target, it gives you the price to set that at. And it gives you some just general ones down here too. So 25%, 50%, 75%, all done for you. All right, let me go ahead and send this off. And again, I'm using a limit order. Oh, filled right away at 250. So even though those options prices were showing some movement all over the board, still filled right away there. Love to see it. All right, and then last but not least, I already know what it is, so I'm just going to jump to it. For our Newton entry, I picked out Tesla for us, which, wow, it actually, you can see it flip just bullish here yesterday on Newton. Tesla opened really high today. Well, I shouldn't say really high, but higher.
Another 2% up. Yeah, I didn't even realize it flipped back.
and faded. So we may have a good little entry here. I did notice, Nate, you were talking about it yesterday, and I was looking at the charts. And if you're just to draw a triangle here,
Yep.
on Tesla, you can see it popped up and out of that range. So let me.
Yeah, I actually drew that like maybe, I don't know, a week ago on, I think that was on an evening edge session, and basically said, hey, we're getting to the point where Tesla's going to have to make a decision. Looks like the decision's up.
Yeah. So I like Tesla here. Newton's green, which means momentum is above average for the stock in a bullish way. If it's red, it means below average downwards moves. Now, you guys know I typically like to trade stocks that look exactly like VST that are going higher and higher. Tesla is a more speculative one here for me, just simply because it can move so much so fast. So I'm going to trade Tesla here to the upside. If you want to buy shares, you can. Obviously, I prefer to sell it when Newton turns back yellow or red. If you prefer the red signal, I prefer the yellow just because it gets me in and out a little bit quicker and I can move on to something else. But for you options traders, if you wanted to trade basic calls on Tesla, I would look 45 to 60 days out, which puts us on the 17th of October expiration. That's about 60 days out. You can buy an at-the-money call. They're $2,800, $3,000 to do that. Instead, I'm just going to use next Friday's expiration just to see if we can skim a nice profit here over the next week and a half on Tesla. Let me check the prices, and then we'll pick our options accordingly. So we're expecting Tesla to move higher. That's a phenomenal price.
Oh, my goodness.
Tesla's above the middle of this wrap, and you can get in right in the middle. So this is a little bit of a special pricing situation for you guys. I'm going to go ahead and take this one.
I'm taking that one.
Newton indicator is no, it's not available for free. I'm not sure the pricing. It's a few $100 to get it on your charts. It's really cool. It gives us a good idea right at one glimpse of where the stock is currently trading with the momentum levels. And it's not momentum levels of all stocks, all market wide. It's that specific stock. So this is telling us that Tesla is trading at above average bullish momentum based on Tesla stock, not based on anything else. So it's just a cool little unique identifier for each individual stock. And of course, it has a scanner as well to find the newest entries. But let me type this up. Newton entry ticker is Tesla. And for the options, I'm going to just go a week and a half out, 22nd of August. And I will give you guys a profit target for this one as well, just because Tesla likes to move in quick bursts in both directions, which can work for you or against you. So the profit target can come in handy. So right now this is trading at 123. I'm just going to say 125, make it a nice clean number for you guys. Posting it here in the chat. And it got even cheaper. So 123, I'm going to send this off. It's at 120 now. We'll see if I get filled right away. I'm going to do another one too. I'll just set up 125. So that one filled at 125. And if you guys have been trading with me, you know that means it has exactly a 100% ROI potential. And all we need is Tesla. Get this. Let me make sure I have the 22nd in picture. All right. Here's the 22nd. We need Tesla above here to double our money. I think that's a pretty cool bet. I'm always shocked when I look at the charts because I always imagine to double your money, you need it way above here. No, we need it here where my crosshairs are, above there. By that date, gives you 100% return on investment. Now, I've got two contracts going. One is waiting to fill, but I'm going to do one of them at an early profit target just so we can walk through that exercise again. In Mac, it'd be much cooler if you can let us change the colors, yellow, green. They're hard to tell apart for colorblind folks. Mac, in the members portal, there should be a guide for that. And I did build one with the blue instead of yellow and green. So that should be in the members portal for you. We had a couple people ask about that. But let me go ahead and talk you through this profit target here in Tesla. I got filled for $1.25. So again, let's just come here, put our information in. 322.50 is the one we're buying. Or excuse me, 332.50. We're selling 335. Our entry price, $1.25. Again, you can set your custom target to whatever you want. Oops. The calculator already gives you some general guidelines. So here it already gave me the 50% target, 188. Of course, you can go higher and get that custom number, but I'm just going to set one at the 50% target, just knowing that Tesla can go up 3% one day, down 2% one day, up 3%, it makes bigger moves. So on one of those big days, if we get one of those days where it does make a big move, I would like to just capitalize on that. So now that I have my trade set, I'm just going to sell it back, use a closing order here, doing the exact opposite. And again, that price was 188 for the target. Limit order and use good till canceled, which again just leaves it open so that if at any point these options hit that price, you get automatically filled. So I'm going to send that one off and it'll just be sitting in my brokerage account waiting. Now, something to keep in mind here, and this is if you want to be a little bit more hands-on. And I don't know if I have a great example of it, but let's say you check the markets at 8:30 one morning and Tesla's up 5-10% overnight, which can sometimes happen because the stock can be crazy. You may want to take that profit target out because you may end up opening up higher. But I'll leave that to you and your discretion. But essentially, if you ever check in the price has moved extremely in your favor, sometimes that profit target will fill for a little bit cheaper than what you could have gotten. So that's just a little fun nugget for you guys there, especially with a volatile stock like Tesla. Did I post that? Oh, yeah, I posted that in the chat. Or if you scroll up a little bit, 10:46 a.m. posted there.
Yeah, I got filled a couple pennies lower, even more. I got a little over 100% potential. That seems like a pretty great rapid. And the thing with the target, like you were just mentioning, Tesla could actually bail and come all the way down to 318, and you're not out of the woods. 2 days later, pops back up to 328, and you're right back in the game. So it's I think for the risk to reward there, you've got a pretty nice setup. Yeah, and the way the target helps us, I mean, let's look at this last one. Now, again, I probably wouldn't have traded this because we were in this triangle. Actually, I didn't trade it, but we were in this triangle. It was not the best stock in the world. We did get an above average Newton reading. If you did use the automated targets, it probably would have hit somewhere maybe the next day, honestly. I mean, it jumped from 322 to 337 at the peaks. $15 move on the stock. Probably would have gotten that target. Actually, I think Jack may have done that one and got it. Either way, I think
you
did.
Still, the cool thing is you would hit that target, and even though they lost money on earnings, went down on earnings, you were out on the sideline. So that's the cool benefit of using a target like that. All right, Nate. I know you've got something to walk us through today, so I'm going to go ahead and.
All right, sweet.
Got my screen share here.
Did anyone? Oh, that's David's version of the screen. So let me share mine. Did anyone attend yesterday? I gave Blake these notes for the 5 stocks. I'm not sure if anyone was able to jump in there, but I gave Blake 5 stocks from 5 different sectors that I think are interesting right now. And what I'm gearing up to do is next week to do a $50,000 live trade show where I deploy like 50 grand across a handful of stocks. And these are kind of some of the short stocks on my list as of now. Now, they might change by Monday because I'm going to look at them in real time. But I get so many questions about, specifically with the income machine, which we'll talk about here in a minute. How conservative do you go in certain situations? How aggressive do you go in certain situations? And so I thought it would be cool if I just took a day, an hour or so, and deployed a new set of capital, like 50 grand across a handful of trades and said, like, this is, I'm going more conservative here. I'm going more balanced here. I'm going more aggressive here. So I'm gearing up for that class. That'll be included for everyone in the income machine, which you can try for free if you guys are not in it yet. And so this is kind of a couple of the stocks that are on my list so far. Now, before I get there, this is kind of the question that I mentioned that Graham already talked a lot about. So I'll just go briefly, which is, where do we go? Graham shared some analysis that looks more like this chart, right? This is the 2008 version of the oh my goodness, we are headed down. Thank you, Dave, for adding my screen there. We are headed down, and it could be a historic collapse. But other people have said, listen, we've got a year or 2 years left. This is kind of a typical melt-up phase that beats the highs and continues moving. And really, every prediction in between those two narratives. Now, I think both of them are compelling for different reasons. I thought Graham did an incredible job walking you through the seasonality and some of the things that are starting to stack up. And then Roger actually shared a chart showing most overvalued if you take into account a series of factors like forward-looking PE and some stuff like that. So lots of different reasons to have different narratives, I think, in where the market sits right now. But my stance is that I'm bullish until the market isn't bullish. So I'm just going to take a very basic, price action forward approach. You guys know I like to use the weekly charts for this. That helps me kind of stay with a good balance of I'm not getting too short term. I'm not getting knocked out with every flush. But at the same time, I'm reactive enough that if we get some momentum moving against the overall market, I can see that and act accordingly. But here's the cool thing. If you want to trade to the upside and still have room for a pullback, what you can do is you can trade defensively. So a lot of my trades fall into this defensive category. Now, the beautiful thing about this, what I think is so important, it might sound simple, but I think it's a big light bulb moment for a lot of people, is that they think when the market gets high or overbought or whatever term you want to use, but there's still momentum and there's still upside, that they either need to be on the sidelines or grip it and rip it and hope for the best, or they need to start hedging and buying puts. And what I like to do more often than any of those is actually still trade to the upside because the trend is up. There's, the overall bullishness is still prevalent in the market. Sentiment's positive, but actually give myself room for error. And so basically what we're doing is we're getting into positions where we give the trade a cushion to go against you and you still win. Again, sounds simple, but I personally think one of the most important things that you can ever figure out in the world of trading is giving a trade cushion to go against you and still win. And I built what I think is the most impressive tool ever created to do that on the best stocks. And if you're not using the income machine yet, you can start testing it for free. So hopefully every single person in here is already doing that. But let me give you 5 stocks I'm liking on the income machine right now. These are kind of, like I said, the start of that hit list for Monday. How many of you guys are already using the income machine and will be joining me Monday when we deploy 50 grand live in a members only class? Hopefully most of you in here already fit that criteria. And so this is kind of the starting point of that watch list, and we'll see what happens over the next handful of days that might adjust that process. But first one we've got is technology sector, and the stock is NVIDIA. Now, I'm sure no one's ever heard of NVIDIA. It's a secret stock, undercover stock, some are saying, that no one's ever heard of. But all sarcasm aside, it's the biggest market cap in the world, and it's just a monster. So why do I like it? It's the king. It's been insanely resilient. And because it's been super strong and super consistent, but it still has really good volatility, you can actually get really nice, juicy ROIs, even with a nice cushion on the trade. So that's one of the reasons I really like NVIDIA. Sector 2 and stock 2 is utility sector and ticker NEE. Now, NEE has been a monster since the April lows, just had an overcorrection on earnings that I think it wants to bounce back from. And I think it actually does better than just an earnings recovery and actually heads toward all-time highs. So I really like NEE, and I think it's a great stock. Sector number 3, stock number 3 is financials. Morgan Stanley. Check out MS. Monster trend, beautiful trend, great fundamentals. Another slight earnings beat, not a huge beat, but just a nice one just to keep it grinding, working on breaking back to all-time highs like it has been. Sector number 4, stock number 4, we've got energy and we've got CCJ. All right, so why? Well, CCJ is a beautiful mix of upside potential and great volatility for juicy premium on the options. Be careful with CCJ because its pullbacks tend to be deep and abrupt, but it's on a mission for $100 a share. And yes, it crushed earnings once again with a lot of fundamental power packed onto the jet engine of CCJ, which I think is now my second best holding after GEV. So GEV and CCJ, I believe, are my top 2 holdings, and they have something in common, which is that they're both nuclear. And then sector number 5, stock number 5, we've got staples. We've got my good friend Walmart. Is anyone really surprised that Nate's going back to the well with Walmart? I love Walmart. I think it's going to continue to prove that it's the best retailer in the United States, Amazon included. It's also working on new all-time highs after that overcorrection that we've had. And I think it gets there sooner than later.
And Nate, I think with Walmart, it's in that we talk about it, but it's like you said, it's kind of got the tech vibe to it as well as the staple. It's like a win-win.
Yeah,
I think personally.
Yeah, I agree. It's not like our other dear friend Progressive, who's been beaten down with some of these defensive stocks during the run-up. It had one kind of abrupt correction and has been recovering really aggressively since. And I personally think it's going to be a winner for years to come.
Yeah, Nate, if you don't mind, just check your Slack. I did send you a little update now because I know we wanted to talk about that 50K trade.
Oh, okay.
Coming up for the income machine. And I believe it's not just one trade, right? It's going to be
correct. It's not going to be one trade. Here, I'll update this. It's not just going to be one trade. What I'm going to do is I'm actually going to deploy 50 grand across a couple different trades, because what I want to do, I mentioned this earlier, I get so many questions about, when do you pick the conservative approach? When do you pick the aggressive approach? All these different kind of questions. And I try to, answer them as best I can. But I thought the best way to answer them would actually just be to do it live, deploy 50 grand worth of capital in different scenarios. And then let's see, how I actually do that based on the trades in real time. So let me add this. Folks, I'm going to talk directly about the income machine now. If you're not using it and you want to get in, you want to start using it, and you want to join me for that $50,000 live trade demonstration over a series of trades, well, then I would like to invite you, and you'll actually learn how you can start using the